in the shadowed corridors of global power, where empires rise and fall on the glint of precious metals, a silent siege is unfolding, one that could reshape the very foundations of wealth as we know it. Picture this. Deep beneath the bustling streets of Beijing, vast vaults brim with shimmering bars of silver, amassed not just as treasure, but as weapons in a new era of economic warfare. As silver prices soar past $60 an ounce in late 2025, shattering records and igniting frenzy in markets from New York to London, China's calculated grip on this unassuming metal is no longer a whisper, it's a thunderclap, echoing through boardrooms and battlegrounds alike. This isn't mere speculation. It's a meticulously orchestrated strategy that's draining the West's resources, fueling Asia's dominance, and redefining the global wealth wars in ways that could leave entire nations scrambling for scraps. Welcome to the story of China's Silver Siege, a tale of ambition, scarcity, and the high-stakes chess game that's turning a humble commodity into the ultimate geopolitical lever. To understand the magnitude of this siege, we must first journey back through the annals of history, where silver has always been more than money. It's been the lifeblood of civilizations. From the ancient Silk Road caravans laden with ingots that powered China's imperial dynasties, to the Spanish galleons hauling plundered Aztec treasures across oceans, silver has woven itself into the fabric of human progress and conflict. In the modern era, this metal's dual nature, as both an industrial powerhouse and a monetary safe haven, has made it indispensable. It's the conductive glue in solar panels capturing the sun's energy, the vital component in semiconductors driving our AI revolutions, and the hedge against inflation that savvy investors clutch in times of turmoil. Yet, for decades, silver languished in the shadow of its flashier cousin gold, trading at modest prices while the world overlooked its quiet accumulation of power. That all changed in the early 21st century, as China's rise from economic underdog to superpower coincided with a voracious appetite for resources. Beijing's leaders, ever the long-term strategists, saw silver not as a speculative bet, but as a cornerstone of their vision for global dominance, a metal that could secure energy independence, bolster technological supremacy, and serve as a bulwark against Western financial systems. By the 2010s, China had already become the world's largest producer and consumer of silver, mining vast quantities from its own soil while importing even more from Peru, Mexico, and Australia. But it was their subtle stockpiling that set the stage for today's siege, with state-backed entities quietly amassing reserves that, by some estimates, control 15 to 18% of the planet's above-ground stocks. This wasn't hoarding for hoarding's sake. It was a deliberate pivot toward resource nationalism mirroring their earlier mastery over rare earth minerals, where export controls in 2010 sent shockwaves through global supply chains and forced the West to rethink its dependencies. Fast forward to 2025, and the siege intensifies amid a perfect storm of global deficits and soaring demand. Silver prices have exploded, hitting all-time highs above $64 per ounce, driven by a relentless supply shortfall that's entered its fifth consecutive year. The world needs over 1 billion ounces annually, yet mining output struggles to keep pace, hampered by aging deposits and environmental hurdles. Enter China, whose actions this year have transformed from accumulator to gatekeeper. In a move that caught many off guard, Beijing's silver stockpiles plummeted to decade lows, down to just over half. 1 million kilograms by November, a staggering 86% drop from pandemic peaks. This wasn't accidental depletion, it was tactical. Massive exports surged in October alone, exceeding 660 tons, flooding international markets with metal while draining domestic vaults. Why export so aggressively? To some analysts, it's a calculated feint, allowing China to repurchase at higher prices later or to manipulate global premiums. But the real masterstroke came with the announcement of stringent export restrictions, set to kick in January 2026. New licensing frameworks that will choke off outflows, effectively turning China's remaining reserves into a fortress. This pivot underscores a broader strategy. By first exporting to depress prices temporarily and then clamping down, Beijing creates artificial scarcity, forcing Western industries to pay a king's ransom for the metal they desperately need. The solar sector, where China already dominates 90% of panel production, feels this pinch acutely. With silver paste essential for photovoltaic cells, any disruption ripples through global clean energy transitions, delaying projects from California's deserts to Europe's windswept plains. As one industry insider put it, China's vaults aren't just storage, they're siege engines, poised to starve competitors and consolidate power in the Green Revolution. But let's delve deeper into the mechanics of this siege, where economics meets espionage in a dance of shadows and spreadsheets. China's strategy draws from a playbook honed over years of commodity control, starting with their rare earth dominance that once held the tech world hostage. Silver, with its irreplaceable role in electronics, EVs, and 5G infrastructure, offers even greater leverage. Beijing's state-owned enterprises, like the China Minmetals Corporation, have been quietly forging alliances with foreign mines, securing long-term offtake agreements that divert supplies away from Western buyers. In Peru, the world's second largest silver producer, Chinese investments now control key operations, ensuring a steady flow back to the mainland. Meanwhile, domestic policies encourage stockpiling through subsidies and tax incentives, building buffers against volatility. The geopolitical undercurrents are unmistakable. As tensions with the United States escalate over trade tariffs in Taiwan, silver becomes a silent weapon. Imagine the Pentagon's dilemma: military hardware from missiles to satellites relies on silver for conductivity and durability. A prolonged shortage could hamstring defense capabilities, forcing reallocations that weaken postures elsewhere. In Europe, where the UK grapples with post-Brexit energy security, reliance on Chinese-sourced silver for solar imports creates vulnerabilities that Beijing could exploit in negotiations. This isn't hyperbole. Historical precedents abound, like the 1970s oil embargoes that reshaped alliances. Today, with silver deficits projected at 400 million ounces for 2025 alone, China's control amplifies these risks, turning market fluctuations into instruments of influence. The wealth wars here are literal. Nations' reserves, industries, and currencies hang in the balance, as Beijing's maneuvers erode the dollar's dominance and promote the yuan as a viable alternative in commodity trades. As we peel back the layers, the human stories behind this siege emerge, painting a vivid picture of ambition and anxiety that resonates across continents. Consider the miners in Shanxi province, toiling in vast underground networks under the watchful eye of state overseers, their output funneled into national reserves that fuel China's grand ambitions. These workers, often from rural backgrounds, embody the sweat equity of a nation rising, yet they bear the brunt of environmental tolls, polluted rivers, and health, hazards that underscore the costs of dominance. On the other side of the globe, in the boardrooms of London and New York, fund managers pace nervously, watching silver futures spike as Chinese export data rolls in. One veteran trader, speaking anonymously, described the October export surge as a gut punch, forcing reallocations that wiped millions from portfolios overnight. For everyday investors in the US and UK, this siege manifests in soaring premiums at coin shops, where a single ounce now commands prices that strain household budgets. Families who once viewed silver as a modest hedge against inflation now find themselves locked out, their dreams of financial security deferred by distant policy decisions. Emotionally, it's a roller coaster. The thrill of potential gains for those who stacked early, juxtaposed with the dread of missing out as prices climb inexorably. In the solar factories from Arizona to Birmingham, engineers scramble to redesign panels with less silver, but innovations lag behind demand, leading to layoffs and shuttered lines. These personal narratives humanize the siege, transforming abstract geopolitics into tangible struggles. Fathers explaining to their children why the family savings must pivot, entrepreneurs betting their futures on alternative metals, and policymakers in Washington and Westminster convening emergency sessions to counter Beijing's advance. Building suspense, we arrive at the heart of the wealth wars, how China's silver siege is redrawing the maps of global power. In this arena, silver isn't just a commodity. It's currency in a shadow economy where alliances are forged and broken over resource access. Beijing's strategy aligns seamlessly with its Belt and Road Initiative, using silver leverage to bind partner nations in Africa and Latin America, offering infrastructure in exchange for mining rights. This creates a web of dependencies that isolates the West, particularly as the U.S. pushes for reshoring under the CHIPS Act and Inflation Reduction Act. Geopolitical. Flashpoints abound, imagine. A scenario where China withholds silver, shipments amid a Taiwan Strait crisis, crippling U.S. chip production, and escalating tensions to boiling points. In the UK, reliant on imported tech, such a move could exacerbate energy crises, forcing compromises on trade deals that favor Beijing. The implications extend to currency wars, with China's gold reserves swelling to over 2,000 tons. Pairing it with silver stockpiles bolsters their push for a multipolar financial system, challenging the petrodollar's hegemony. Analysts warn of a silver curtain descending, dividing the world into spheres, where access to this metal determines technological edge and economic resilience. As prices hover near $64, with whispers of reaching 75 or even 100, the siege tightens, squeezing out smaller players and concentrating wealth in the hands of those who control the supply. This isn't mere market dynamics. It's a deliberate redefinition of wealth, where Beijing's vaults hold the keys to tomorrow's empires. The climax of this narrative unfolds in real time as 2025's market chaos reveals the siege's full force. With global silver demand outstripping supply by hundreds of millions of ounces, China's export restrictions loom like a gathering storm, set to slash availability just as winter demand peaks for electronics and renewables. Prices, already up over 100% from early year lows, could surge further, triggering a feedback loop where industrial panic buying meets investor frenzy. Solar giants like First Solar and Longji, heavily dependent on Chinese supply chains, face existential threats, production halts that could delay the global net zero, pushed by years. In the wealth wars, this translates to trillions in shifted value. Western economies bleed capital to secure alternatives. While China's state coffers swell from premium sales and strategic investments, geopolitically, the US responds with tariffs and alliances, forging pacts with Australia and Canada to boost mining, but these efforts pale against Beijing's entrenched positions. The UK, navigating its own path, ramps up North Sea explorations and EU partnerships, yet vulnerabilities persist. Amid this turmoil, silver's role as a safe haven shines brighter, drawing retail investors into the fray. The app's buzzing with buy orders as headlines scream of shortages. But beware the pitfalls, counterfeit bars flooding black markets, regulatory crackdowns on speculation, and the ever-present risk of a sudden policy reversal from Beijing that could crash prices temporarily. This climax isn't resolution, it's escalation. A high-wire act where one misstep could ignite broader conflicts, turning economic sieges into outright battles. Yet, as the dust settles on this epic saga, a path forward emerges for those wise enough to heed the lessons of China's silver siege. In a world redefined by resource wars, knowledge becomes the ultimate armor. For investors in the US and UK, the message is clear. Diversify beyond fiat. Embracing physical silver as a hedge while it's still attainable, even at elevated premiums. Look to unhedged miners in safe jurisdictions like Canada, where stocks could multiply as deficits deepen. Governments must accelerate domestic production and international coalitions, reducing dependencies that leave them at Beijing's mercy. On a personal level, this siege urges reflection, reassessing wealth not in dollars or pounds, but in enduring assets that withstand geopolitical tempests. China's strategy, masterful as it is, highlights the fragility of interconnected systems, reminding us that true security lies in self-reliance and foresight. As silver gleams under the lights of a new multipolar dawn, the wealth wars rage on, but armed with understanding, we can navigate the siege, emerging not as victims, but as victors in the grand game of global power. Hold fast, for the metal that once built empires now reshapes them anew. Thank you for staying with me till the end. Here on The Scope, we dig past the headlines and uncover the hidden layers history tried to bury. If this documentary made you think differently, hit subscribe. Your support tells me to keep creating deeper investigations. Share this video with someone who loves powerful untold stories, and leave your thoughts in the comments. I read everyone. A new, even stronger documentary is already on the way. So stay curious, and I'll see you again soon, right here on The Scope.